All right, before we jump in, gotta do the usual quick reminder. This is all for educational purposes only. This is not financial advice, so please, you have to do your own research.
Okay, let's get right into it. Today, we're going to talk about something that is so important for anyone involved with PLAZM, long-term value. We're going to break down exactly why this whole T² accumulation thing is designed to make watching the daily price, well, kind of pointless. So here's the game plan. We'll start with the one question that's probably on your mind right now, then we'll dive into the mechanics that really drive value, and we'll wrap up by giving you a solid long-term way to think about all this. All right, section 1, the wrong question. This is all about making a huge mental shift, moving your focus away from the price ticker and onto something that actually matters, your share count. This is it, right? The question that lives rent-free in our heads. It's the first thing you check when you wake up, the number that kind of dictates your mood for the rest of the day. And you know what? It's totally normal to be focused on it. But, and this is a big but, when we're talking about building long-term value in this particular ecosystem, this is absolutely 100% the wrong question to be asking. It's a total distraction from where the real wealth is being created. And here's why. Think of price as just a snapshot in time. It's chaotic, it's noisy, it goes up, it goes down. Your shares, on the other hand, that's your permanent piece of the pie. It's your actual ownership. And because of how this protocol works, that ownership is designed to grow exponentially. So let's get to the engine behind all of this. Section 2 is about the power of T². This is how time, not timing, becomes your secret weapon. So what the heck is T² staking? It's a reward system where your earnings grow based on time squared. And that little change makes all the difference. Instead of staking for twice as long and getting twice the reward, you get 4 times the reward. It completely changes the game for anyone who's in it for the long haul. Just take a look at this table to see how insane this is. In a normal world, 30 days of staking gets you, say, 30 units. Cool. With T², it gets you 900. Now, just follow that multiplier column. At 77 days, you're not getting 77 units. You're getting almost 6,000. That's a 77 times multiplier, just for being patient. And this number just drives it home. At only 77 days in, the T² effect is already 77 times more powerful than a simple, boring, linear model. You're not just earning a little more, you are earning on a completely different level. This is where time becomes your greatest asset. Which leads us right into section 3, where we tackle the big, scary monster in the room, price drops. Let's really look at why, in a system like this, your share count is your anchor in a volatile sea. So let's play this out. You got in at 5 cents, and today the price is somewhere around 3 cents. The first feeling, that gut reaction, is probably panic, right? A sense of loss. You're looking at a drop on paper, and yeah, that stings. But here is the number that did not change. Your share count. If you had 50,000 shares when the price was up here, guess what? You still have 50,000 shares now that the price is down here. The price drop didn't touch your actual ownership. Meanwhile, your T² clock just kept on ticking. And this is where you have to flip the script in your head. For people who are accumulating for the long term, pullbacks aren't a bug in the system. They are a feature. They are the best opportunities you're going to get to add to your position at a discount. This is the difference between being a trader and being a builder. Okay, so moving into section 4, let's look at the cold hard data. Because this isn't just a nice idea. You can actually see this conviction playing out in the protocol's mechanics and what the builders are doing. So a super important thing to get is where these rewards actually come from. They are not magic internet money. They're funded by real trading fees from nearly 8,000 bonds. Think of these bonds as little businesses that are constantly working for the protocol. We're talking over $67,000 in real yield generated so far. And the best part? This engine runs no matter what the PLAZM price is doing. And here is the proof in the pudding. During a recent price pullback, what did people actually do? Did they panic? Did they sell? The data says the exact opposite. As you can see, 40,000 tokens were staked, another 40,000 were burned, and on top of that, people added 68 new bonds to the system. That doesn't look like panic to me. That looks like conviction. All right, section 5. Let's zoom out a little and look at the real long-term game plan here, the multi-cycle strategy. This is where you see how just sticking with it over time completely obliterates your initial entry price. This table is pretty mind-blowing. Just follow that break-even column all the way down. After one cycle, your break-even is almost 30 cents. Okay, but by cycle 4, because you've been consistently participating, your break-even price has crashed all the way down to less than 1/10 of a penny. At that point, who cares what you paid in cycle 1?
And think about what that means. At the recent price of around 3 cents, that cycle 4 participant is already 35 times above their break-even point. 35x. That is the insane power of long-term T² accumulation. You can be profitable at almost any price. Okay, so let's tie this all together in our final section, your long-term thesis. Think of this as your new dashboard, a really clear guide on what you should be watching, and just as importantly, what you should completely ignore. This is the signal. Focus on this stuff. Is your personal share count going up? Is the total amount staked in the protocol growing? Are tokens being permanently burned and removed? Is that real yield engine still chugging along? And is most of the supply locked up and safe? These are the vital signs of a healthy protocol.
And this is all the noise. The daily price, the weekly charts, whatever Bitcoin did yesterday, it's all short-term distraction that's designed to make you anxious and get you to do the wrong thing. It doesn't build value, it just builds stress.
I want you to really let that sink in. The price you see today, in a year, it's just going to be a tiny forgotten blip on a long-term chart. But the shares you're accumulating today, that's what defines your future. That's your claim on everything that's to come.
So what's the price today? Wrong question. The right question is, how many shares did you accumulate today? That's the question that builds wealth. There are 14.33 billion shares out there. Every single day you stake, your slice of that pie gets bigger, with time squared. Today's price is tomorrow's footnote. Your shares are tomorrow's value. Stop watching the price. Start building.
And to wrap it all up, our full disclaimer. This was for educational purposes only, and it is absolutely not financial advice. Never, ever invest more than you can afford to lose, and please always do your own research before making any decisions.